Looking for high-yield dividend stocks to buy in February? In the world of investing, dividend stocks hold a special place. They've consistently outperformed non-dividend payers over the past 50 years, offering an annualized return of over 9% compared to just under 4%. Today, we'll be discussing 3 such stocks that are proving to be attractive options this February: Altria Group, Pfizer, and Verizon Communications. So, if you're keen on making your money work harder for you, stay tuned. Let's delve into these high-yield dividend stocks and why they are considered solid buys in February. First on the list is Altria Group, a domestic tobacco giant. Altria Group has a storied history, with an impressive track record of raising its payout 58 times in the past 54 years. This is no small feat, and it's a testament to the company's exceptional pricing power. Altria's pricing strength comes from its dominant market position. As a leading player in the tobacco industry, it has the leverage to adjust prices to offset declining cigarette smoking rates. This ability to maintain strong profits even amid changing consumer habits highlights the resilience of Altria's business model. However, Altria isn't resting on its laurels. The company is making strategic moves into the smokeless products market. The burgeoning smokeless sector offers a new avenue of growth for Altria, and the company is poised to capitalize on this opportunity. But like any other business, Altria Group also faces challenges. The decline in cigarette smoking rates is a significant headwind. However, Altria's move into smokeless products, coupled with its pricing power, provides a robust buffer against this challenge. Despite some challenges, Altria Group's robust pricing power and diversification into smokeless products make it a compelling buy. It's a testament to Altria's resilience and adaptability, qualities that make it a standout choice for investors seeking high-yield dividend stocks. Next up is Pfizer, a pharmaceutical company with a yield of over 6.2%. Now, you may remember Pfizer as the company that was at the forefront of the COVID-19 response, developing one of the first vaccines to combat the virus. This venture generated significant revenue, bolstering the company's financial standing. But don't be mistaken, Pfizer's success isn't pinned solely on its COVID-19 treatments. The company has an impressive portfolio of approved therapies that are expected to continue to grow, adding to its revenue stream. From oncology to cardiology and everything in between, Pfizer is constantly innovating, researching, and pushing the boundaries of what's possible in healthcare. The healthcare sector is also considered a defensive sector. This means that despite economic downturns or market volatility, people will always need healthcare. This creates a sort of safety net for investments in this sector, making Pfizer a potentially stable choice for your portfolio. However, it's not all sunshine and roses. Pfizer's stock price has seen a decline recently. This can be attributed to a multitude of factors, including market volatility and shifting investor focus. However, it's crucial to remember that the stock market is a marathon, not a sprint. Temporary declines don't necessarily indicate a poor long-term investment. Despite the decline in its stock price, Pfizer's high yield and the growth potential of its product portfolio make it an attractive investment option. Last but not least, we have Verizon Communications, a telecom company experiencing modest growth. As we enter the age of 5G, Verizon finds itself at the forefront of this revolution. The company's broadband segment is also expanding, contributing to its overall growth. It's an exciting time for Verizon as they navigate the new frontiers of telecommunications and digital connectivity. However, every silver lining has a cloud, and Verizon is no exception. The company faces challenges from rising interest rates, which could potentially impact its growth trajectory. There's also the matter of potential liabilities related to lead-sheathed cables, a concern that investors should keep an eye on. Yet, it's important to remember that all companies face challenges, and what distinguishes the great ones is their ability to turn these challenges into opportunities. And Verizon, with its robust growth and strong position in the 5G revolution, is well equipped to do just that. Furthermore, Verizon offers a high yield, a factor that income-focused investors would find attractive. So, while there may be bumps along the way, the overall journey seems promising. Despite these challenges, Verizon's growth prospects and high yield make it a must-consider for investors this February. In conclusion, Altria Group, Pfizer, and Verizon Communications are 3 high-yield dividend stocks that are screaming buys in February. With Altria's exceptional pricing power, Pfizer's promising portfolio of therapies, and Verizon's potential growth driven by the 5G revolution, these stocks offer enticing prospects for both long-term growth and high yields. Don't forget to like this video, subscribe to our channel, and check out our recommended videos for more investment insights. Stay tuned for more financial news and updates.